let's dive straight in. I mean, this is one of the most how shall I put it, exciting and at the same time confusing markets that I've ever seen in 20 years. It is so hard to catch on to a trend, because by the time the trend is, you know, set, it has turned. That's what's happened in the last 2 years. So if you guys are struggling to make money in these markets, don't beat yourself up, because I speak to some of the biggest hedge funds, some of the biggest professionals out there, and you know what? Everyone is struggling this year. So just a word of encouragement: keep going, keep following your discipline, and let's dive straight in. So before we start, as always, I've got to do a quick disclaimer, which says the information contained within this presentation is intended for educational and illustrative purposes only and does not constitute investment advice. Do not make any investment decisions or other decisions based on the material presented. We cannot be held responsible for your trading results. For more information, please visit www.tradinghd.com. So now that's out of the way, a little bit about myself for some of you who may be here for the first time. I've been a stockbroker for over 20 years. Been talking to some of the biggest hedge funds globally. I speak to them on all asset markets. We look at global macro. We look at all sectors globally. We try to find the best stocks to buy and the best stocks to short. Really as simple as that. We try to find our ideas on a global basis. Me and my team are very passionate about markets. We never switch off. We look at trends and try to identify what's going on literally on a 24/7 basis, because that's the nature of these markets. And I've also done a brief lecture course with TradingHD, which you can find on TradingHD's website. And so precise rules, precise guidelines. Let's implement them today and see where we are. A little word of encouragement and testament from Lex Van Dam, who's been a client of mine for many years. Fantastic hedge fund trader, and nice of him to say that he likes the concept, because we use very consistent price action signals and a disciplined approach, which if you follow also, you could see some dramatic improvement in your results. As always, let's dive straight in. The one thing that I'm very particular of is the long-term position of the RSI. So this is the panel beneath the price chart. And I've always said this, even in my lectures, that if there is one indicator that you have to give me, put me on a beach which is unconnected to the world, in an island, and if I have only one indicator to follow to make my decisions, it would be the RSI. So I use a 14-period RSI over here. And one of the guidelines that I follow is that you are in a strong trending market, which you should be in a buy and hold situation, is when the RSI on a monthly basis is above 60. When the RSI is above 60, as you can see in this entire period, we are in a strong trend. As soon as you break 60, you start a bear market. You stay above 60 for 4 years, some pullbacks, but you consistently stay above 60. But when you break 60, you start a bear market. Again, 2012 to 2015, beautiful trending market to make real money in. In fact, we had some of our best years with our hedge fund clients, because all you needed to do was to be in the market and stay with the market. And as soon as the monthly RSI, which happened in 2015 in August, closed beneath an RSI of 60, we had a sharp pullback. But these pullbacks over the last 9 months have been very different to the bear markets that happened in 2008 and 2001 to 2003. Because quite peculiarly, the RSI has been able to bounce back to 60 once, come back down again, bounce back to 60 again. And as you can see, the current reading as of the end of May is at 58.33, which is so perilously close to an RSI reading of 60 that I actually believe that the month of June, by the end, I thought that we would get confirmation by now about what the real trend of the market is. But all that we have is a sideways market for the last year and a half. But this sideways market is about to finish. And I think what you're going to see in the month of June is either a sharp breakout above 60, and we'll go to a weekly chart in a second, sharp breakout above 60 that kickstarts a massive bull market again, that takes us to new highs, which kind of nobody would expect because sentiment is still quite bearish. There are lots of people who are calling an end to the world. And this is where your own personal discipline, do not be swayed by what you read on the internet. Do not be swayed by what the experts tell you. Do not even listen to me. Listen to the market. And if we get a monthly RSI reading above 60, you can actually start to see the beginning of a really strong trend, which would mean that this whole period of the last 18 months was a mere consolidation within a strong uptrend, and it breaks out to the upside. But we are not there yet. We could quite easily, in the month of June, make another attempt and fail. And once we fail, we could start a trend that takes us back down to retest these lows. And I don't know how it's going to play out, but what I do know is that if you look at the weekly chart, which is the next chart, you can see this whole sideways period. I love sideways markets. I love being in a sideways market because once you're in a sideways market, you know that when you get out of a sideways market, you will have a very strong trend to play with. So here's my contention. The weekly RSI is at 56. The monthly RSI is at 58, as you saw in the previous slide. If we are able to get the weekly RSI close above 60, and please note that from 2015 onwards to now, the weekly RSI has never been able to close above 60. There are 4 failures at 60. Every time the market has been at the highs, and all the people who've been bullish have been telling you that we are now about to have a new breakout to the upside. S&P is going to 2300, S&P is going to 2500. You've never got those moves because the weekly RSI never really went above 60. In fact, throughout 2015, it has stayed beneath 60. Throughout 2016, it has stayed beneath 60. So until we get a close above 60 on the weekly RSI, you are strongly advised to maintain your discipline and stay neutral on the market. You cannot be short right now. Why can't you be short? You cannot be short because price is above the 45 EMA on the weekly chart. And that's the golden rule that I follow, that when prices are above the 45 EMA on a weekly chart, you have to be long. And if you want to be bearish, you can only be bearish when prices are beneath the 45 EMA on the weekly chart. It's a golden rule I've never broken in my life, and it's helped me to stay out of trouble, especially when I'm trying to get, or if I get too bearish for whatever reason, and the market's not confirming that bearishness, I stay with the indicators. And you can bring this down to the daily chart and also say, right, okay, I'll get bearish on the S&P once the daily closing price of the S&P is beneath the 45 EMA. And at this moment in time, as we speak on Friday, the daily RSI, the daily price of the S&P is above the 45 EMA. So you cannot be short. You in fact have to be long. And if we do get this breakout, you will be on the right trade. So conclusion, you've got to be watching the market really carefully in June. And once we get the breakout above 60 and a weekly close above 60, you can start to work with the assumption that we could potentially get a breakout from this sideways move. But if we fail at 60 and start turning lower and close beneath the 45 EMA, you can then start to think of going short. Okay, so it's very, very clear. There's no room for any doubt. Same thing applies to the Nasdaq. You can see that the Nasdaq is also exactly at 57.39 as of today, the monthly closing price. So again, very, very tightly poised. You can see that the bear markets only begin once the RSIs fail beneath 60 and continue to go down, like we had in 2000 to 2001. We're in a sideways market. We could break out, we could fail, and we could turn lower.